Every dollar has a story. Not a metaphor, a literal, traceable, mathematically verifiable story. Every transaction leaves a mark. Every wallet has a history. Every attempt to erase that history creates a new kind of evidence that didn't exist before the erasure was attempted. The people who understand this better than anyone are not the criminals who move the money. They are the people who spend their careers following it, through shell companies in Wyoming, through crypto mixers in Iceland, through NFT wash trades on OpenSea, through cash businesses in strip malls in cities nobody is watching closely enough. The IRS Criminal Investigation Division has a 90.6% conviction rate, the highest of any law enforcement agency in the United States. Not 60%, not 75%, 90.6%. When these people decide you did something wrong and build the case to prove it, they are almost never wrong about what happened. They are just slow, methodical, patient in a way that people who think they've gotten away with something fundamentally misunderstand. This is what it actually looks like inside. Every level, every tool, every moment where the invisible thread connecting dirty money to the person who moved it becomes visible. Level 1, the financial analyst, 23 years old, $54,000 per year. You stare at spreadsheets that represent crimes you can't prove yet. You graduated with a degree in accounting or finance or computer science. You passed a background check so thorough it included interviews with your college roommates. You joined FinCEN, the Financial Crimes Enforcement Network, as an analyst, which means you are the first human filter between the 20 million suspicious activity reports filed every year and the investigations that actually happen. 20 million SARs per year, filed by banks, crypto exchanges, money service businesses, casinos, any institution required by law to report transactions that don't make sense. Your job is to read them, pattern match them, and determine which ones represent something worth pursuing versus which ones represent a small business owner who makes inconsistent deposits because his revenue is inconsistent. The volume is the first thing that breaks people, not the content, the volume. Your queue on Monday morning has 340 reports. By Friday, it has 280 because you processed 200 and 140 new ones arrived. The queue never reaches zero. The queue is not supposed to reach zero. The queue is the entire point. It is the visible surface of a financial system trying to process its own anomalies faster than they accumulate. Your salary is $54,000. In Washington, D.C., where FinCEN is headquartered, $54,000 requires a roommate and a budget and a very specific relationship with the concept of sacrifice as investment. Your college friend who went to Goldman makes $110,000. You know this. You made a different calculation. Not that this job pays better, but that this job means something different, and meaning has a value that doesn't appear on the offer letter. The tool you use most in your first year is not sophisticated. It is pattern recognition applied to financial data at scale. A restaurant reporting $40,000 in cash deposits every Tuesday with mathematical consistency. Real restaurants don't have mathematically consistent revenue. A cryptocurrency exchange flagging a user who receives funds from 47 different wallets in 72 hours and immediately converts to Monero. A law firm trust account receiving wire transfers from 6 different countries in amounts that clustered just below $10,000. Just below $10,000 is the TAL. $10,000 is the federal reporting threshold for cost transactions. People who know about the threshold, and everyone who moves dirty money knows about the threshold, structure their transactions at $9,800 or $9,500 or $9,200. This is called structuring. Structuring is itself a federal crime, separate from whatever the underlying money is from. You can go to prison for structuring even if the money was completely legitimate, because the act of deliberately avoiding the reporting threshold demonstrates intent to evade financial oversight. You flag your first real case in month 7, a series of SARs from 3 different banks in 3 different states, all referencing the same LLC, all describing the same pattern. Cash deposits followed immediately by wire transfers to a correspondent bank in Cyprus. The amounts vary, the timing is consistent. The LLC lists its business purpose as consulting services. It has no website. Its registered agent is a company in Wyoming that serves as registered agent for 4,300 other LLCs. You write a referral memo. It goes to IRS Criminal Investigation. You never find out what happens to it. That's the job at this level. You identify the thread. Someone else pulls it. Level 2, the IRS Special Agent, 27 years old, $82,000 a year. You have a badge and a gun. Your weapon of choice is a subpoena. IRS Criminal Investigation Special Agents are the only IRS employees authorized to carry firearms. There are 2,100 of them. They investigate tax fraud, money laundering, and increasingly cryptocurrency crime. Their conviction rate is 90.6%. That number is not an accident. It is the result of a case selection process so rigorous that by the time CI recommends prosecution, the case is already built. You spent 2 years at FinCEN before lateral transferring to CI. The difference is physical and psychological. At FinCEN, you analyzed data. At CI, you follow the data into the world, into storage units, into offshore accounts, into conversations with witnesses who know more than they're saying and are calculating in real time how much cooperation costs versus how much silence costs. Your first major case involves a crypto mixer operator in Ohio, 29 years old, former software developer, has been processing approximately $4 million per month through a mixing service for 2 years. His Coinbase account shows $180,000 in declared income over the same period. His lifestyle, new apartment, new car, international travel documented on Instagram, suggests something closer to $800,000 in annual spending. The gap between declared income and observable lifestyle is called a net worth analysis. It is one of the oldest investigative techniques in financial crime, and it works because people who make money illegally still spend it in ways that leave records. They buy cars, they renovate apartments, they take flights, they pay for things with cash in amounts that get noticed by the people they're paying. You serve a grand jury subpoena to Coinbase for his complete transaction history. You serve another to his bank. You serve another to the property management company that holds his lease. You serve one to the airline he flies most frequently. None of these institutions can tell him you've requested the information. He doesn't know you exist yet. The blockchain analysis comes next. Your unit uses Chainalysis, software that maps transaction flows across public blockchains, identifies wallet clusters belonging to the same entity, and flags connections to known criminal addresses. The mixer he operates has processed funds from wallets linked to 3 ransomware groups, 1 darknet market, and a fraud operation that stole $12 million from elderly victims and a Medicare billing scheme. He didn't know any of this, or says he didn't. Doesn't matter. Operating a money transmitter without a license is a federal crime. Processing funds without AML compliance is a federal crime. The specific origin of the funds determines the severity, not the knowledge of it. You execute a search warrant on his apartment on a Tuesday morning at 6 a.m. He answers the door in a t-shirt. He looks at your badge for a long time without saying anything. You find 4 hardware wallets, 2 laptops, a notebook with wallet seed phrases written in pencil, and $23,000 in cash in a Nike shoebox in his closet. He asks if he needs a lawyer. You tell him that's his decision to make. He makes it correctly. Level 3, the Supervisory Special Agent, 34 years old, $128,000 a year. You run the team. The cases are bigger. The patience required is longer. You manage a team of 8 agents. Your unit specializes in cryptocurrency and darknet investigations, the fastest growing area of financial crime and the area where the gap between criminal sophistication and investigative capability is narrowest and most contested. The cases at this level take years, not months, years. A cartel money laundering network operating through crypto doesn't get dismantled in a single search warrant. It gets dismantled through 18 months of subpoenas, blockchain analysis, confidential informants, international legal assistance requests to governments in Cyprus and Panama and the UAE, and the patient accumulation of evidence against every node in the network before any of them know the network has been identified. The technique that changes everything at this level is called a controlled financial operation. You identify a money mule, someone low in the network who is moving funds but doesn't have full visibility into the operation above them. You approach them quietly. You explain their situation accurately, the charges they're currently facing, the charges they could face, the cooperation agreement that exists if they choose it. Most people, when presented with an accurate description of their legal situation, make rational decisions. The mule becomes a source. The source introduces you through carefully managed interactions to the next level of the network. The next level leads to the level above it. You are building the case from the bottom up while the top of the network continues operating, unaware that the foundation is systematically documented by federal investigators who are not in a hurry because the statute of limitations is 5 years and the evidence improves with time. In 2023, your unit works a case that begins with a single SAR from a crypto exchange in New York, a user receiving $340,000 in Bitcoin from wallets flagged by Chainalysis as connected to a Mexican cartel. 18 months later, that single SAR has produced a 47-count indictment against 11 defendants across 4 countries, the seizure of $68 million in cryptocurrency, and the identification of a laundering infrastructure processing $200 million per month. The defendants include a software developer who thought he was doing freelance consulting, a lawyer in Panama who thought his shell company practice was legal because nobody had stopped him yet, an accountant in Dubai who processed fiat conversions and filed what he described as normal business taxes. None of them were present when the drugs moved. None of them touched the violence. All of them are facing federal conspiracy charges with mandatory minimum sentences because the money they processed funded both. This is the argument you make to juries. The distance between the act and the money doesn't change what the money is.
Level 4. The DOJ prosecutor, 38 years old, $155,000 a year. You take the case to trial. The jury is 12 people who don't understand blockchain. Assistant U.S. Attorney, Southern District of New York, the most prestigious federal prosecution office in the country, the office that prosecuted Bernie Madoff, prosecuted the Gambino crime family, prosecuted Enron executives, and is currently processing more cryptocurrency-related financial crime cases than at any point in its history. Your job begins where the agent's job ends. They build the evidence. You build the narrative. The evidence is complex. Blockchain transaction graphs, international wire records, shell company ownership chains that pass through 7 jurisdictions before reaching a human name. The narrative has to be simple enough that 12 people with no background in financial forensics can follow it, believe it, and convict on it beyond a reasonable doubt. The translation problem is real. A Chainalysis transaction graph showing $4.8 million moving through 11 wallets across 4 chains in 48 hours is, to a financial crime specialist, a clear and readable document. To a retired teacher from Queens or a construction worker from the Bronx, it is a chart that looks something between a subway map and a conspiracy board. Your job is to make the subway map tell a story a human being can follow and feel. You develop a framework you use in every crypto case. You start with the victim, the tangible human consequence of the money that was moved. The ransomware attack on a hospital in New Jersey that delayed cancer treatments for 340 patients. The elderly couple in Florida who lost $280,000 of retirement savings to a fraud operation whose proceeds were laundered through the defendant's mixing service. The fentanyl that moved through a distribution network funded by the cartel whose crypto the defendant cleaned for 22% of the take. Then you follow the money backward from consequence to defendant, not forward from defendant to crime, backward from harm to hand. Juries understand harm. Juries understand that money which funds harm is not neutral because it didn't touch the harm directly. The hand that cleans the knife is not innocent because it didn't hold the knife. The defendant's lawyer argues ignorance. His client processed transactions. He didn't ask where the money came from. He didn't know. You present the signal messages, recovered from a phone seized at the border, where his client is explicitly told the source of the funds and responds with a single word, ready. You present the net worth analysis, $47 in a bank account 28 months ago, $51 million in identifiable assets today. You present the hardware wallets found in a Singapore safe deposit box. You present the Panama lawyer's cooperation testimony, the Dubai accountant's cooperation testimony, the developer's cooperation testimony, each one describing the defendant as the architect of a system they were each a component of. The jury deliberates for 4 hours. Guilty on all 23 counts. Level 5. The special agent in charge, 46 years old, $195,000 a year. You run the division. The cases are geopolitical now. You oversee 200 agents across 6 field offices. Your unit's mandate has expanded from domestic financial crime to transnational money laundering networks, the infrastructure that allows criminal organizations to operate across jurisdictions faster than law enforcement can follow across borders. The challenge at this level is not investigative, it is jurisdictional.
A laundering network operating across 19 countries processes funds through legal systems that don't talk to each other at the speed the money moves. By the time a mutual legal assistance treaty request reaches a government in Eastern Europe and produces a response, the wallets it references have been burned and replaced 3 times. The solution your division develops is pre-positioning, identifying networks before they reach full operational scale, building the international cooperation framework before you need it, so that when the moment comes to act, the request has already been pre-negotiated and the response arrives in days rather than months. You brief the Deputy Attorney General quarterly. You brief the Financial Stability Oversight Council annually. You have testified before the Senate Banking Committee twice on the intersection of cryptocurrency and transnational organized crime. The senators ask questions that range from sophisticated to deeply confused. You answer all of them with equal patience because the legislative framework your division operates within depends on the people in that room understanding the problem well enough to fund the solution. The 2024 operation your division coordinates involves law enforcement agencies in 11 countries, the simultaneous execution of 34 search warrants across 8 time zones, the seizure of $340 million in cryptocurrency, and the arrest of 28 defendants, including a 28-year-old software developer on a beach in a non-extradition country who receives an extradition request from a country he didn't know how to treaty with the United States. He had $51 million in cold storage. He had an exit plan for 3 countries. He had a fake passport and a new identity and a house on the beach where he thought he'd stopped. He hadn't stopped. He'd just moved to a smaller room to wait. The knock came anyway. Closing. The thread that doesn't break. Every transaction leaves a mark. Not a metaphor, a literal, immutable, mathematically permanent mark on a public ledger that exists in thousands of copies simultaneously across the world and cannot be altered retroactively by anyone, including the person who created it. The fundamental misunderstanding of cryptocurrency as a tool for financial crime is this: the blockchain is not darkness. The blockchain is a permanent receipt. The goal of every mixing service, every bridge hop, every NFT wash trade is to make the receipt unreadable. The goal of every blockchain analyst, every IRS special agent, every DOJ prosecutor is to read it anyway. The analysts are getting better faster than the obfuscation techniques are improving. Chainalysis identified $20.6 billion in illicit cryptocurrency transactions in 2023, not because $20.6 billion evaded detection, because $20.6 billion was detected. The number that evaded detection is smaller than it was the year before. Somewhere right now, a 23-year-old FinCEN analyst is reading a suspicious activity report filed by a cryptocurrency exchange. The report describes a user receiving funds from 47 wallets in 72 hours and immediately converting to Monero. The analyst flags it, writes a referral memo, and sends it to IRS Criminal Investigation. The person who moved those funds thinks they're invisible. They're not invisible. They're just not indicted yet. The thread is already there. Someone just picked it up.